Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Monday, May 1st, 2023. Before I click through all the charts, just want to encourage you to please click like if you haven't already. It helps us out a great deal in being found on YouTube. Also, become a wickedstocks.com, a Wicked Stocks YouTube channel subscriber. I think that's the right phraseology. It will help you in being notified when we upload new content, including the daily Apple Tesla report and the occasional stock pick that we put out for free on YouTube. Also, check out wickedstocks.com, where we offer a full array of daily and weekly analytical videos, including a daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week, 8 a month that you never see on YouTube, all for $47 a month. And we offer a 5-day free trial. So your card is not transacted until the 5th day. And so you have time to check it out. And if you don't like it, you can cancel and your card will not be transacted. So there you have it. So jumping to this chart, weekly chart. Back in January, if you've been a follower of the Apple report for a number of months, you know that we had anticipated the 120s support as able to contain longer term selling pressures, quarterly selling pressures anyway, possibly annual. We'd mentioned that once tested, the low 170s channel top should be considered in reach by some point in 23. And then it didn't take long, maybe 4 weeks later, 3 or 4 weeks later, where that was answered as more of a 3 to 5 month target when we settled above, gapped above this 134.32 channel top. And then about a month ago, after hesitation for a little over a week, we pushed through, settled above the low 160s, essentially that indicated the low 170s as our next 2 to 3 week objective. And so we are testing it now. And I say testing it now, we haven't literally actually tested it, but we've pushed into the zone. So I'm going to go back to the weekly chart here and just show that this is the top of the channel on the weekly chart, 171.35. The zone begins at 169.63. So we did actually test that, pushed into the 1% zone for the first time actually last Friday. So we are testing this area essentially. It can 171.35, and there's all kinds of, the daily chart is 171.17. I'll show that in a moment. There's all kinds of stuff going on in the 170 to 171 handles that sort of screams important area. Where if you bought the 172 calls, whether it was a month ago or in the early February when we had that 3 to 5 month buy signal, or even back in January when we were mentioning the 170s as a possible target, you may have bought 1 year till expiration, a 170 or 172 out of the money calls at that time. Regardless, this is your profit taking zone. This is also your area where you may consider setting a short position, and whether that's selling the stock as a short stock trade or buying out of the money puts, if that's something you're accustomed to doing. Right now, you could say low 160s still, 160.49 as a 1 to 2 week, 2 to 3 week target, and that's probably more properly shown here. 162.08 is a new channel bottom on the daily chart. We could fall off from here, some variation of 162.08. And so if you're a near-term options trader, by near-term I'm talking 2 to 3 weeks out, buying the 162 or 163 out of the money puts at this point in time would be the way to go, that don't expire for at least several weeks. And also because of the importance of the low 170s, as I've been saying, if you're more of a 2 to 3 month position trader, you may buy 155 out of the money puts that don't expire for at least, I'd go 2 or 3 months out on that, and 3 to 5 months possibility in the low 140s now. The truth is, this is such a significant area. You don't really know. Obviously, I don't have a crystal ball, but from here, we could fall back into the low 140s, kind of where this 128.66 number is on the chart. We could fall all the way back here over the next 3 to 5 months. That would be consistent with normal market behavior. And so there you have it. We're testing a long-term resistance area, and you kind of pick the strike, you pick your time horizon. But once again, if you're going for the 155 out of the money puts, they don't expire for at least 3 months. If you're going for the 143 out of the money puts, they don't expire. I'd go for at least 6 months out on this. None of those are going to take that long, I don't think. I mean, they could. But you really don't want to be correct on the trade, only to see your option as you reach its strike expire worthless with days to go for expiration. So that is a scenario that does happen at times. You want to go a little further out. You're paying more for premium, but at least you're preserving delta, as I like to call it. So I think let's go to the day itself, and I'll cover that quickly. First of all, as I said, we've got all kinds of things going on. 170.58, I have that as a session containment level, but the market could just as easily test 170.99, which is this long-term trend line. It could just as easily test, 171.17, which is the daily chart version of that long-term channel top, or 171.35. It really is pick your point. It's about a 60-cent range right now above the market that can absorb longer-term buying pressures. And we are in the zone, as I say. So working downside now, 167. Let me go back to a daily chart here. 167.63 is a downside Fibonacci. So if we happen to ease back, no, it is this high settlement price from about 2 weeks ago, a week and a half ago, and the market backed off in a meaningful way. So 167.63 is also just below Friday's low. So that happens a lot, as you're well aware. You kind of break the low, you get some hesitation, and the market comes off of that, and that can happen today at 167.63. If we break 167.63, I have 166.33, which I don't show anywhere, but is a downside 50% retracement on the last 3 days. This meaningful rally, half back is 166.33. This scenario unfolds if we open a little lower on the day and continue south, breaking 167.63, anticipate 166.33, and that may be it for the day. If we close below 166.33 today, I do think 162.08, this channel bottom, is likely to be tested within a day or two of doing so. 162.08, able to contain weekly selling pressures. So the 3 to 5 day swing trade now is you're setting a short anywhere in this 170 handle. And it really begins at 169.63 for the longer term traders. But I'd say the 3 to 5 day short position is really at 170.58. This could be beefed up to a weekly resistance area, but I'm deferring more to this upper area, this long-term resistance area in the 171 handle. So you're playing the short side as a 3 to 5 day swing now in the low 170s, allowing for this market to fall back by the end of next week or sooner to 162.08. And if we close today below 166.33, not shown here as a 50% downside retracement, then we're just a couple of days away from testing 162.08. where we could bottom out through next week, and from here rally into the low 170s. We could trade inside this area for the next 2 to 3 weeks, perhaps. A consolidation may well be in order following a test of this long-term resistance. There's nothing to say that the market would sell off aggressively following a test of this long-term resistance. I think the selling begins below 162.08, quite frankly, as we move into later May, and then the sequence looks something like this. 2 to 3 weeks, 153.36, where we could bottom out through June, perhaps. I'm just kind of outlining potential scenarios. Rally back into the low 160s again and trade inside this band for a while. So forth and so on, potentially down to 142.86. And that pretty much covers it. Now, the last thing I'll say, I'm 8 minutes and running here, is I do want to cover the upside. What if? What if we do close above 171.35? That needs to be by a 1% margin once again. That's 173.06 all week long. And if we do close early this week above 173.06, we may well actually reach, I don't think so actually. I think this is really realistically more of a 2 to 3 week move, 3 to 5 week move. But I'm going to leave it at that. I'm going to cover the big picture. I don't think it's even worth going there. Later in the week, if we're pushing firmly into this 171 handle and even closing above it, but not above 173.06, FYI, then I will show you a series of minor points and session containment resistance levels. I'm just not ready to present all that yet because I haven't done all that homework. So if we close 173.06 or higher, at the end of the week on Friday, we've got a pretty significant long-term buy signal. So if you then went short, this week and you bought those 162 or 145 out of the money puts, as I described earlier, you would want to liquidate those entirely if we close 173.06 or higher, even on a daily basis this week. But certainly followed up on Friday with a settlement at 173.06 or higher. I then have 182.94 as a by the end of May objective. We could double top here for a week or a month, but honestly, closing above 171.35 by the required 1% margin, I do think our next long-term target is this 217.40 and rising channel top. This could be, it could be as little as 3 to 5 months, but more than likely the better part of a year as this thing continues to pull away. So I'd call it a 5 to 8 month objective, as I've already described. And that is all I'm going to say for Monday's Apple. You have a great day. Please click like, subscribe, and check out wickedstocks.com.